Welcome, my friend, to this video on Parabolic SAR, which stands for Parabolic Stop and Reverse. It is a time price system, and it is a very cool technique. It was developed by Wells Wilder, a very, very famous name in technical analysis. Wrote the book New Concepts in Technical Trading Systems back in 1978, one of the most famous books ever written in technical analysis, and it is indeed an excellent, excellent book. So he is truly one of the thought leaders in all of technical analysis, and the concept behind this is very cool, but I want to point out to you a few things that you better be careful of. So here they are. So basically, as SAR, again, stands for stop and reverse, what we are basically looking for here is when the indicator, which are these blue dots here, when they are above price, basically you're looking to go short, and when they're below price, you're looking to go long. And then it is a type of trailing stop, so that when the dots go from below price to above price bars, well, that's when you would then stop and reverse, so to say. It doesn't mean that you'd always stop and reverse, but again, that is literally what SAR stands for. So this kind of thing, of course, in general, will work fantastic with trends. Fantastic with trends. And by the way, the longer the trend continues, it's kind of a complex mathematical formula, but it has what's called a step to it in the formula, which tightens up that stop the longer that it goes, which is why time is involved as well. So actually, I can point that out to you here real quick. So for example, here we see, let me actually clear this up for you real quick. So we got a clean slate to work with. So here, well, it depends whether you want to go with the high or the low. Actually, you have to wait till that bar is closed. So, but see how far away it is from the bar here and how close it is to the bar there. So it has a nice situation with the mathematics of it where it gets tighter and tighter as time goes on. And the idea of that is so that if the market does stop trending, then you don't lose as much. Now, of course, in this situation, and this is part of the deal, is that it did not keep you in for the full trend. The market continued going down. So it went down from there and kept going down this whole time. Oh, gosh, you can't even see that, can you? Let me pull over my chart here a little bit for you. Yeah, there we go. Now you can see the whole thing. So nothing's perfect, right? And this is not a criticism of it. It's just to point out the reality of the situation. So even though we had this big, long move here, Parabolic SAR would have stopped us out pretty much in the middle of the move. Pretty much in the middle of the move. But now you can change the parameters on this. You can change the parameters. In fact, let me show you the parameters that I have, because people often ask me that, which is a good question. So here are the ones that I'm using right now. You can play around with these and adjust them, but you can see acceleration, acceleration max, acceleration step. There's the step that I was talking about. Your language might be a little different on your trading platform. That's fine. But anyway, that's what we've got here. And again, you can use this on daily charts, 3-minute charts. You can even use them on tick charts and things like that if you want to. Whenever I pull up an interval, people ask me, why'd you use that interval? Well, if I used a daily chart, people would say, well, why'd you use a daily chart instead of a 3-minute chart? So, or, you know, this is a stock, but you can do this on Forex or futures as well. So it's really universally applicable in that way. And it's great in trending markets. Here's one of the main points I want to make to you today, though. Even beyond this particular indicator, that if you see automated programs, automated trading programs, or when everybody's advertising to you something and telling you how great their system is, and they show you a bunch of examples, look at the chart and ask, are the charts they're showing me trending markets? They almost always will be, I guarantee you, because trending market is easy. Well, I hate to use the word easy with trading at all, but it's one of the easiest ways to trade, right? So sure, anybody can stay in to a trending market and make money. So it's back in the days of the tech bubble, everybody thought they were a genius because all you had to do was buy, a tech stock and it would go up and up and up for years. Yeah, nobody was a genius. It was just, that was easy. You just go up because the market went up. So you just buy. All right, nobody had to be skilled. And then all of a sudden, when things got more complicated, the market stopped trending, then everybody lost all their money and even more. Why? Because they never learned the skill and the profession of trading. So let me show you another example. Now, one last thing I wanted to point out here too. This is very important. So another place where, if you're day trading, this is only for day traders. If you're going to day trade and use the Parabolic SAR, then you got to be careful at the open, okay? Because when you get something like this, where you get a gap from one day to the next, okay, this vertical line, if you can see that, that's the end of one day and the beginning of the next day. So it's really still measuring the close of yesterday. But we gap down here, and so this is still telling us to go short, right, based on these bars. And it's a 14-period Parabolic SAR, so it's going to be lagging there. So that's why it doesn't switch until here. So if you shorted this, you'd be in a world of pain. Right. In fact, the idea of this thing giving you tight stops does not work very well when you get a gap down at the beginning. That is not a tight stop. You'd be going short here, and the market comes up against you quite a bit. Not good. No bueno. Okay, let's look at another example. Okay, so actually I just moved it to the previous day. I could have just done that without starting and stopping the software here. But anyway, it just so happened, yeah, we got a great example here for this. So let me actually bring up a different drawing tool with a different color for you this time. That might be a little more readable instead of using the blue, since we already got the blue dots there. So here it's telling us to go short, basically that bar. All right, so if we want short there, and then we get our other bar going under it, under that bar, so we'd be stopped out there. So that's a loss. All right, now we're told to go long here. So we've got to wait for that bar to finish. So we go long there, and then we get stopped out down here. That's a loss. Then we get another signal to go short this bar. So we're going short, but then we get stopped out and we get a signal to go long on that bar. So yeah, that's the problem. When markets don't trend, this thing doesn't work so well. And neither do any other indicators that depend on trend. Now, when Wells Wilder wrote the book, New Concepts in Technical Trading Systems, from what I read, at least, not out of the book, but I read it elsewhere, that he estimated the markets trended 30% of the time. So he created a lot of great, very famous indicators, RSI, average true range, ADX, this one. And, a lot of it was about trending markets, which, again, is fantastic. But yes, he was right. Markets did trend back then more. That book was written in 1978. And that was really pre-computer age, if you will, right? 1978. That was the year after I graduated high school, for goodness sake. I certainly didn't have a computer, so I didn't get a computer till graduate school. And even then, we didn't have the internet, and we didn't have direct access and all that kind of stuff. So bottom line is, what he was teaching was great for that time. But the markets move differently now. Now we've got everybody and his pet hamster has direct access to the markets. And commissions are really cheap, so you can actually get in and out fast and inexpensively. Back then, when I first started trading, it was like $50 to get in and $50 to get out. So it didn't pay to get in and out of the market in a couple minutes. In fact, you couldn't even do it because you didn't have access to the data. Now everybody has real-time data, direct access, cheap commissions. People are getting in and out fast. You got algos. You got, you got high-frequency traders, which are trading nanoseconds. And bottom line is all this stuff means that markets have changed. They move differently now. So you've got to, now when markets do trend, it's a beautiful thing. Now people, most of the people that I hear say markets trend about 20% of the time. I don't know if there's any real official number on it, but I think it's a little closer to 15%, frankly, now. So I think it's gotten even worse since the 20% has kind of become the general accepted number. I think it's lower than that now. So bottom line is you got to have a different approach to trading. You've got to have targets and not just use trailing stops. You've got to be able to get in and out quick when the market's not trending and still hit singles. So in other words, instead of going for home runs all the time, got to understand 9 out of 10 of your trades are going to be just singles. Just a little single, right? Baseball analogy. And that's okay. Making a little money, make a little money. Well, this one didn't follow through, and you trade bar by bar. So many people ask me, how do you know if the trend's going to follow through? I don't know the future, and neither do you. God does, but he's not telling me. So what do I have to do? I just have to watch the market literally bar by bar, because that's how the market is these days. And by the way, past performance is not indicative of future results. So what the market used to do or what it's done over the last 30 days or 5 years with backtesting means diddly squat, because things happen so fast in the markets today. It could be news that pops out. Well, how are you going to backtest what news pops out today? Or, unannounced news, right? Not on the economic schedule. Gossip, rumors, and just how people feel about things and how people's sentiment change, and whether somebody comes in with a big order, some institution comes in with a bunch of orders, starts accumulating, or starts running stops. There's just so many things going, and it's a global marketplace now. So it's an international marketplace. So you have people from all over the world, not just the United States, not just the UK, but all over the world trading these things. And not everybody's in sync with everybody else. That creates chaos too. So the markets are much more random, much more chaotic than before. And more now than ever, you have to become a master of risk management and money management. And not expect that you're going to get the big home runs all the time. When I day trade, I would say on average out of 5 days, I'm going to get 2 huge winners. 2 huge winners. But now those 2 huge winners can be a whole month's worth of income. So, it's worth it. But you got to be there for each trade so that when the big winner comes, you don't know in advance which one's going to be which. But you got to be there. When I was in Chicago, they used to say that a scratch is a win. And what they meant by a scratch is basically just a break-even trade, because they knew all the stuff I'm teaching you. Well, that's where I learned it. And so they said, yeah, you just got to be there for every trade. Nobody knows what's going to happen in the future, in a half hour from now, an hour from now, 2 hours from now, let alone 5 minutes from now. So every trade that's set up that has your probability scenario in it, your mathematical statistical model, you take every one of them. Then you place your stops really close. By the way, I would never, for me, in my trading methodology, I would never place a stop that far away. Never in a million years. Actually, it'd be that far away, right? Because you got to wait for, actually, no, it would be that far away. Oh, dang, it'd be that far away. You got to wait for that bar. Yeah, I mean, to me, that's nuts. I would never do that. Never in a million years. But that violates the principle of cutting a loss of small, letting your winners run. So in my trading method, I never risk the range of more than a bar to a bar and a half. So on something like this, I might risk just that bar if I was going to go short. And that's it, the range of 1 bar, because I got to keep my losses small. So I never use these for initial stops especially. If it's a trailing stop after the market starts moving, if you want to, use it, okay, that's fine. I don't personally use it. I have other ways of managing my money. But as an initial stop, to risk all that? No way. I'm not going to risk that much money on a single trade. So anyway, that's it. Oh, by the way, if you'd like to learn how I do enter the markets, what I personally do use, I have a 1-hour webinar, and right now it's live. So as you're listening to this, it is July 9th, 2018. Obviously, this is recorded, so years from now, this video will probably still be on YouTube, and I probably won't be doing the webinar live. And we'll probably, at that point, put it on a recording so that you can still access it. But if you'd like to get my timing indicator to learn how I get into the market and only risk the range of a bar to a bar and a half at most, feel free to send me an email, barry@topdogtrading.com. And just ask for the market cycle indicator, and we'll know what you mean. We'll send you information about that that we have at the time that you send in that email request. And also, I do have a free course that I want to share with you, and that free course has my rubber band trade in it. That rubber band trade is a beautiful little scalp trade, super high win-loss ratio. If you like to get a lot of winners, very few losers, then this is the trade for you. So again, it's not a big reward to risk ratio trade because it's not a trend trade. It's actually a reversion to the mean style trade. But because of that, man, I'll tell you, the winning percentage on this thing is huge. I still, to this day, take it every single time it sets up. So I'll give that to you with one of my mini courses, absolutely free. No credit card required, no nothing. Just click that link in the upper right-hand corner of the video, and we'll get that over to you. Also, if you like the video, indicate that below. Write down any comments. If you have a topic you'd like me to cover in the future, let me know that too, down in the comments below. And the best thing you can do is to share the video with others. If you thought this video was good, it's helped you, then share good things with good people, and click the share button below as well. I'd really appreciate that.